So this video we are talking about how Trump's inauguration has impacted the BTC market currently. Let's dive in. You see, on Monday, Donald Trump was officially sworn in as the 47th president of the United States. Congrats. You see, according to Stephen Miller, Trump's deputy chief of staff for policy and homeland security advisor, he said that the inauguration day will be followed by several executive orders, and we saw that to happen. It turned out so. So now these orders are primarily aimed at neutralizing the Biden admins, all those policies on DEI, immigration, climate change, and securing the US-Mexico border fence. Yeah, so he's planning to change all that. Interestingly, such a move indicates that Trump's first term should not be considered a clear-cut reference point. However, from Trump's personal picks, it is already clear what kind of macroeconomic landscape investors are going to be expecting. So after the Biden's admin broke all records in budgets, deficits, and national debts, now Trump's admin has a daunting task ahead. The Congressional Budget Office, CBO, had already issued a statement on Friday that the new admin will face $1.865 trillion budget deficit for fiscal 2025. This is assuming that Trump's tax cuts from 2017 will expire, which makes it a baseline forecast. In turn, the enormous gap between federal spending and federal revenue will be the driving force that determines Trump's policies. His Treasury Secretary pick, Scott Bessent, seems to favor spending cuts over raising tax to make up for the shortfall. According to Bessent, his testimony before the Senate Finance Committee last Thursday, Trump's first-term tax cuts within the Tax and the Jobs Act of 2017 should be extended. Bessent also emphasized that the US has spending problems and not a revenue shortfall problem, suggesting imminent budget cuts across the board. That spending could be cut from foreign aid, federal aid programs, green energy, subsidies, public housing, and rental subsidies. You see, previously Elon Musk aimed for $2 trillion worth of cuts as the ideal goal within his Department of Governmental Efficiency, DOGE, but recently halved that expectation. Overall, Bessent's plan is to institute a 3-3-3 economic plan, referring to cutting the federal budget deficit to 3% of GDP, raising the real GDP adjusted for inflation to 3%, and boosting oil supply for an extra 3 million daily barrels by 2028. So what should we expect? So it's certain that the cost of living is going to be increasing as an artifice of central banking. Reversal deflation will likely result from increased unemployment, lower production, and consumer spending, all of which should signal major political weakness that isn't to be avoided by the Fed's monetary tools. The last consumer price index (CPI) for December showed an annual inflation of 2.9% or 3.2 core rates, exclude volatile food and energy. The Federal Reserve trend maintained that the target should be 2%. Of course, this just means that this is the baseline erosion rate of the dollar's purchasing power, which is why Bitcoin has been gaining ground.